Okay, welcome to this video. My name is Daniel. I'm a 16-year forex trader. So today I'm gonna be showing you guys how I personally backtest my forex strategy or anything else that I need to confirm. So as you can see on the chart, I have the Euro USD open on the daily time frame. I'm more of a long-term trader. So at the moment we can see that the current market is in a bearish trend, and I'm looking to enter in this trade. It's been well, so yes, here we go, and I'm just trying to find what a good point to enter. So that's the first thing that I do actually, is identify the major resistance points and then see if the trend or strategy is perfect for me to enter. I want to trade things that work out for me. So what I'm gonna do is open my envelope indicator. I use the envelope indicator just to show my entry points so I can enter the market and exit the market. That's the goodness of this envelope indicator. It really helps me, but I don't trust indicators fully. That's the thing. Okay, so as you can see, I have also the 200 moving average there, but it takes long. Again, I'm on a daily time frame. Okay, my envelope indicator is open, and I'll be looking for a breakout. That's what I'm hoping. Okay, there we go. Let's just wait for it. It's going down. Just again waiting for the breakout to happen. There we go. Oh, that's the strong resistance point. Okay, that's the breakout I was looking for. As you can see, the strong bearish trend, and this is a good confirmation for me that I can enter the market right there. Again, I don't really trust indicators fully. I use it for confirmation and add on evidence so that I can make sure it's a good trade. As you can see that I have the trend lines, two trend lines, which is one confirmation. I've got the moving average really 200 SMA, which is not really helpful at the moment because it takes long to get into the system, and then the envelope. So I'm gonna bring up my Fibonacci line so that I can see how the trade is going in the long-term run, and I can identify. Oh, okay, we're still in the red zone. Alright, okay, so what I can do next is bring out the Fibonacci again so that I can identify in the short term. Okay, still in the red zone. Alright, wow. Okay, so what I can do now is, okay, let's do that. Okay, the middle part. Yeah, okay, we're looking about this halfway. Okay, so yeah, okay, I'm gonna put that this is half the trend. Yeah, so this is half of it, 50%. So I won't be looking to go above that as in my trend. Really, I don't like doing that much of the match. It's get your profits, come out. Yeah, some may say let the winners run, but really you don't know what the market is capable of. Okay, so what I've done there is brought the more of a bar so that I can identify like, okay, that's another middle strong resistance point, while the market might bounce back down. At the moment, in the short term run, we're in a bullish trend, but in the major long term run, we are in the bearish side. Okay, let me just remove that. Let me just zoom in there so that I can now start executing my trade. So again, I treat all my backtesting as serious as I do with a real trade, and that is, guys, it's more of the discipline and emotions. Even if you know it's fake, just I just follow everything because this is the same system that I use in my real account, and you have to be disciplining yourself for that. Okay, so in the long term Fibonacci line, we can say okay, that is a good point. Cross the red zone. Really, I love the red zone Fibonacci. It's mostly that the market will not bounce back beyond the red zone, but if it does, then yeah, it does that. Yeah, but you cannot identify where the trade is gonna go. So I have identified where my where the strong point is at the middle blue line on top there is going to bounce back. So let me just put my stop loss. First of all, I always calculate my risk. I do not like to just enter directly in my marketplace. I calculate my risk, but because sake of the video, I'm not going to calculate, but I'm going to be realistic in how I do the things. But most of the times in the real market, I always calculate my risk management, which is very important for a trader. Okay, so I'm just gonna put it there. I'm just bringing it closer and there. Okay, so I'll be looking for a 4-to-1 win ratio rate on this trade. Well, I've done this because it looks like a good trade. Everything resistance point, trend line, it bounces back, and yeah, it's a good thing. And I'll be hoping to get the full 1-to-4 win ratio. So okay, there we go. We're up again, guys. Treating it as I treat my real trades, guys. And there we go. Going up, and okay. Oh, that red candle doesn't look good. Yeah, it's a sign. Okay, yeah, really, I'm sure the market might go down temporarily for a moment. I'm pretty sure about that. Let me just do this. I'll bring in this other one so that I can avoid giving back my profits to the market. That's what I usually do. And I will set it up and see. I could go for a 2, not really, 1, yeah, 1.8, no, 1.666, or maybe a 1.5 will do. Yeah, really, 1.5. So I'm avoiding to give back my personal market, but I'm sure it's gonna go back up the moment. I'm sure it's gonna go down, so that's what I'm trying to avoid. Okay, I'm sure I'm ready for that. I just monitor it, and there I was right. Wow, that's a big nasty red candlestick. Honestly, I never expected it to go even beyond, but wow. Okay, I'm just bringing out my envelope indicators to see what's happening here. Okay, so you see, at this point I'm very sure our retail traders will be selling because, oh no, it's going down, they'll be selling. But we don't do that. I don't do that here. It's more of a consistent, and I'll be looking for it to go. Yeah, no, I'll stay consistent. That's a first breakout. I'm going to stay disciplined on this trade. It's gonna go my way somehow, but what might to identify that. Okay, all right, there we go. Okay, all right. Wow, took longer than I expected it to. There we go. Okay, that's a breakout. So now retail traders, the sellers, are now recognized. Oh no, why didn't the trade go my way? It's because you're not disciplined about it. Okay, again, guys, consistent. This is our trade, and hopefully you can get something out of it. And yeah, okay, let's continue with the trade. There we go. Okay, up. Have I been stopped up? Just zoom out and check. Let me hide the envelope indicator to make things more clearly and delete this zone. All right. No, just stopped out. Okay, perfect. Stopped out. So guys, that's it. 4 2-to-1 win ratio there that we got there. An amazing performance, good backtest trading day. So this is how I backtest my strategy, and this is how basically I execute my trades in the real world. But not most of the times I go for 1-to-4. 1-to-4 ratios really is something rare, so I can say most of the times go for 2-to-1, 3-to-1. 1-to-4 is when like a trade like this, everything fits your way, every strategy, every indicator, trend line, support, which is, and everything that works out for you fits yours. And I go for 1-to-4 win ratio. So after this, what I do is during my backtest, after I backtest, I just type in what I've learned. Okay, let me just type in everything that real quick. Okay, so after typing, then I save my image and then I document it. So thank you guys for this video, for sticking around to this video. Hopefully it helped you out and shows you the realistic thing. Again, treating backtesting is really important thing if it comes to success in forex, and it shouldn't be taken for granted. I suggest you test your own backtesting strategy, but this is how I personally backtest my strategy. Please don't forget to hit the subscribe button, comment down below, leave a like button, and click the notification bar to get notified when I upload a new video. So thank you, and I will see you in the next video. Daniel out.